Energy Transition, episode 22. Are investors scared? Good morning, Irina Slav and Dave Blackman.
Good morning.
Good morning.
So many uncertainties and controversies in the energy sector at these days that can affect the mood of investors, maybe or not. In your opinion, Irina, are they comfortable investing their billions of dollars or euros in new energies?
Well, it would depend on the investors. I mean, those who are determined that the way forward and the way to more profits is in renewables will probably continue doing it. But it seems that the big asset managers of the world are taking a step back, it seems, and so is big oil. There have been a record number of environment-related, emissions-related shareholder petitions from activist investors, but shareholders are not voting for them, not this year, unlike last year and the year before. And this tells me that maybe there's some reconsideration of priorities among investors and asset managers, despite their stated intention to, the companies such as BlackRock, for example, and the other biggest asset managers who have been giving out signals that they will be kind of forcing their clients to make climate-related commitments, or they will drop them. It seems that things may be changing, what with the oil price rally and the gas price rally and the return of coal, which is quite notable, I'd say.
David, the return on investment must be much higher than the normal to compensate these risks that probably are higher too.
Sure. Yeah. It turns out that even ESG investors want to make money. Who knew that? When you have one sector, one group of or one segment of the economy and the market that is so dramatically outperforming the rest of the market, investors are going to want to put money into it. And that's happened with the oil and gas business this year. I suspect it will happen with the coal business as demand for coal continues to skyrocket, despite the best efforts of the EU and the Biden administration. And and plus BlackRock in particular, and Vanguard and these investor groups that do business in the United States have been under political pressure from the state of Texas specifically. The state legislature here in Texas passed a law last year that requires the Texas comptroller to create a list of investor groups who discriminate against the Texas oil and gas business and disallow them from participating in Texas, the state's various retirement funds. Well, it turns out BlackRock had about $6 billion invested in the Texas Teachers Retirement Fund and doesn't want to go away from that business. Obviously, they don't want to forfeit that investment. And so BlackRock wrote a sweet letter to the Texas comptroller talking about how focused they have been on investing in the oil and gas industry in Texas all these years and promising not to discriminate. And so it hasn't just been returns, it's also been some political pressure at the state level. And this is good. I mean, it's good for the world because obviously we have a shortage right now of oil and gas. Rystad Energy came out with a new study here over the last couple of days talking about the dearth of proven energy reserves globally now and how much it plummeted during 2021 by, what was it, 152 million or billion barrels of oil from the previous year. So we need those reserves. We need to invest in oil and gas. Otherwise, economies are going to continue to crash like we are beginning to see now in various parts around the world. And so it's a positive thing.
In the past, money for the investments in oil and gas, for instance, probably came from the big companies, the majors. Nowadays, money to invest in new energies are coming from different sources. I mean, from investment groups and retirement groups. So, what does it mean for let's see the investments level and the risk analysis?
Well, I mean, I'm not sure what you mean. I'm not an investment expert. I mean, yes, you're right. The funds, the capital does come from investment groups in large part. I mean, a lot of independent producers, though, are able to finance their capital budgets out of cash flow, free cash flow now, particularly those who are focused on the Permian Basin and the Marcellus Shale here in the U.S. But yes, the majors and most independents do borrow quite a bit of money to finance their big projects. ExxonMobil had a statement a couple of weeks ago talking about how they've invested, 30% more than their annual cash flow for the last several years in developing new reserves, and that's fairly typical, I think. But yes, and so I mean, the people impacted by it here in the U.S. Are just regular people. Hundreds of millions of people invest in oil and gas in their retirement funds through firms like BlackRock and Vanguard and others. I actually have some Vanguard in my retirement fund, to come to think of it. So it impacts across the society, and the risk profile, of course, with oil and gas is a cyclical business. And so it's something that you have to pay a lot of attention to, get in at the right time, get out of at the right time, so that you don't get stuck during a bust.
Irina, traditional capitalist countries now are interfering in the market directions. What's your perception of this new situation?
Well, I think government support in every way possible for renewable energy has really provided a huge, huge spur, a huge motivation for investment in new energies, because it's pretty logical and it makes a lot of sense. If so many governments in Europe in particular are throwing their weight behind wind, solar and hydrogen with legislation, not just with funding, but with legislation, this means that these technologies have a future, and it's a bright future, because there will be a lot more demand for them in the future, thanks to this support and in the form of legislation, than there was before. So it's worth it. You know, the risk seems lower because demand will be there. So this explains to me to a considerable extent the whole ESG movement, even though on a pretty basic fundamental level, it means fewer options for investment. If you invest in wind and solar because you believe they are the future and you believe they're good for the planet, and you're being discouraged from investment in oil and gas in many ways, then you wouldn't be investing in oil and gas. And now you will be sitting and wondering what happened, because energy stocks, oil and gas stocks, are outperforming every other industry in the US stock market. I'm not sure what the situation is in Europe, but in the US, it's the only industry that's bucking the trend. The Financial Times reported it a couple of days ago. So basically, ESG investors, to some extent voluntarily, to some extent as a result of various forms of pressure, are being discouraged to invest in oil and gas because they're bad, because we won't need them in a couple of decades. So why bet on a losing horse? But now we're finding out that this horse is not losing at all. And let me just mention again, coal. Demand for which is on a very, very strong rise, which I don't believe anyone expected. But here we are.
Yeah, I totally agree with that. I think one of the most failed narratives that the ESG investor community has tried to propagate over the last 15 years has been this narrative of stranded assets, that all companies
Right.
shouldn't be investing in new reserves because they're not going to be allowed to produce them by what, 2035, 2040, whatever it is. I don't know anyone who's in the oil and gas business who actually believes that's going to be the case. And I think there's a growing realization outside of the industry and in the investor community that, oh, well, these renewables are not going to be able to displace oil and gas. They can be additive to it. So we're going to have an energy addition and not an energy transition. And yeah, we might go to electric vehicles and hydrogen vehicles and sort of do away with internal combustion engines. But I just interviewed the president of Cummins week before last, and they're developing all sorts of internal combustion engine alternatives that are cleaner, run more efficiently, pollute less. And they plan for those engines to be part of the transition going forward. So, I mean, a company like Cummins, which is a leader in the industry in developing engine technology, doesn't believe that oil and gas are going to be gone by 2035, like the Biden administration claims. And I just think that the energy mineral shortage of lithium and cobalt and all these other minerals is creating a realization within the investor community and governments that oil and gas are going to be around for a lot longer than they had hoped.
With all these variables, return of investment, risks analysis, and source of money to invest, the world's not paying enough attention to the energy security. That should be the, let's see, the focus of government strategies. Is it correct, or?
Well, yes, we're seeing it right now. Suddenly, the energy security has topped emission reduction as priority number one. We talk that coal economies in Europe will fail if Russia turns off the tap. And it's good. It's good that this focus has returned on the most important element of the global energy system. First of all, you need energy. Second, you might think about making it cleaner and less polluting and less bad for the environment and for people. But priority number one, as much as many activists dislike this, is the security of energy, the availability of energy. And I suspect they dislike it because they have never, ever been in an energy shortage situation. They have had reliable, available, and pretty affordable energy for all their lives. Now they might be forced to, to adopt a different perspective by the realities of the energy shortage. It's a shortage of everything, basically.
Yeah. I mean, lack of energy security is really in Europe is actually at the base of this. I believe what we're going to see is a global economic recession, obviously made much worse by Vladimir Putin's decision to invade Ukraine. But it was a crisis that began long before then and was made inevitable by policy choices made by national governments and at the EU. And even the EU, we see signs that they're beginning to back off and modify their positions as it relates to natural gas is a great example. They're moving forward with a new policy that will classify natural gas as qualified under their green investment regulations in the EU, and that's a good thing. But yes, I mean, step one that all these governments forgot about is you have to make sure you have secured enough energy to run your economy, keep homes heated in the winter, produce food, because natural gas is the feedstock for most fertilizers used in the farming sector globally. And unfortunately, and very sadly, we're about to probably see, as this year goes on, an awful lot of starvation in developing nations due to a lack of energy, due to the energy crisis and the inability of farmers in exporting countries to produce enough food to feed the world. And the Biden administration and some European governments continue to allow millions and millions of acres of prime farmland to be used to produce corn that is made into ethanol instead of into food. And it's ethanol we don't need, that serves no real environmental purpose. And this is only done because the makers of ethanol have developed an extremely strong lobbying practice in their industry that has a ton of influence in Congress and in Washington, D.C. in general, and with the EU. And this is very tragic. And these are conscious decisions being made by policymakers that they know are going to result in famine in the third world. And I mean, I know I've talked about this before, but it's just it's so sad to me that we are moving in this direction in the Western world, and it's really tragic for other parts of the world.
It's very similar. The corn in the United States is very similar to sugarcane in Brazil. They
Right.
influence the lobbies and
But sugarcane, at least, doesn't consume more energy than it creates with the ethanol, right? I mean, corn, you consume more energy than you actually provide by trying to convert corn into ethanol. Sugarcane is a much more efficient crop, at least, to use for that purpose. But Archer Daniels Midland and other corporate farming groups here in the United States, again, have a very powerful lobby and influence on Capitol Hill. And unfortunately, it results in this kind of really absurd policy choices.
Irina and David, the conclusion might be investors are not scared, only careful in their investments.
Finally, they're becoming careful. I think finally they're thinking what they want to do with their money. It looks like it.
Yeah, I mean, thinking and at the end of the day, money talks and profits talk, and returns on investment are still the number one concern, even with ESG investor companies like BlackRock and Vanguard. And so, I mean, I just think that's kind of what runs the world, at least in the free world.
That's right. Thank you so much for this nice conversation, Monday.
Thank you.
Thank you.
Have a good day.
Always
folks.
a pleasure.
A pleasure. Bye-bye.
Have a great week. Bye-bye.
You too.
You too.
Thanks.
Bye-bye.